The cryptocurrency landscape in mid-2025 presents a fascinating paradox. While retail enthusiasm for digital assets appears to have cooled from its previous fever pitch, XRP trading volumes tell a different story entirely. The average daily trading volume of XRP in Q1 2025 is $1.73 billion, up from $1.4 billion in Q1 2024, suggesting a sophisticated and determined buying cohort that extends far beyond the typical retail trader profile. Understanding who comprises this buying force requires examining the convergence of regulatory developments, institutional positioning, macroeconomic factors, and technological adoption patterns that have fundamentally altered the investment landscape for Ripple's native token. The current trading environment reveals a striking demographic shift in XRP ownership patterns. XRP had 137,130 for buyers, 40,000 for 129 sellers, and total 170,348 trades in the last two for H, indicating a buyer-to-seller ratio of approximately 3.421, which represents one of the most bullish sentiment indicators seen across major cryptocurrencies in recent months. This imbalance suggests coordinated accumulation rather than speculative trading, pointing to institutional or semi-institutional buyers who operate with longer time horizons and deeper analytical frameworks than traditional retail participants. The institutional narrative becomes clearer when examining the exchange distribution patterns. Binance, Coinbase, and Kraken are responsible for over 61% of XRP's global trading volume. XRP USDT is the most traded pair, contributing to over 42% of the total volume. This concentration on major, regulated exchanges favored by institutional investors suggests that sophisticated market participants are driving much of the current demand. The predominance of the XRP USDT pair, rather than fiat pairs, indicates that buyers are already within the cryptocurrency ecosystem and are reallocating capital from other digital assets into XRP rather than representing fresh fiat inflows. From traditional finance, corporate treasury departments have emerged as a significant new buyer category, driven by a combination of yield-seeking behavior and strategic positioning ahead of potential regulatory clarity. XRP is seeing significant corporate treasury investment, with potential price growth if legal and ETF conditions improve. These corporate buyers, typically mid to large cap companies with international payment flows, view XRP not merely as a speculative investment, but as operational infrastructure that could reduce cross-border payment costs and settlement times. The appeal extends beyond cost savings to include regulatory arbitrage, as companies seek assets that may achieve clearer regulatory status ahead of broader cryptocurrency adoption. The investment management industry represents another crucial buyer demographic, with positioning occurring across multiple vectors. Asset managers are accumulating XRP both for client portfolios and in anticipation of ETF launches that would create structural demand. ProShares will list the first Ripple XRP futures ETF in the United States on July 18, 2025, which is significant, will make it easier than ever for institutional investors to obtain XRP. The momentum has prompted 11 major asset managers, including Bitwise, Grayscale, Franklin Templeton, and 21 Shares, to file applications. This institutional momentum creates a feedback loop, where early positioning drives price appreciation, which in turn validates the investment thesis and attracts additional institutional participation. High-net worth individuals and family offices constitute another significant buyer segment, often operating through private wealth management platforms that have recently begun offering cryptocurrency exposure. These buyers typically operate with multi-year investment horizons and view XRP as a strategic allocation within a broader digital assets portfolio. Their buying patterns tend to be less sensitive to short-term price movements and more focused on fundamental developments such as regulatory outcomes, partnership announcements, and technological adoption metrics. Geographic analysis reveals distinct regional buying patterns that reflect varying regulatory environments and adoption rates. European institutional buyers have shown particularly strong interest, driven by the continent's more favorable regulatory stance toward certain cryptocurrencies, and the European Central Bank's exploration of central bank digital currencies that could integrate with existing blockchain infrastructure. Asian buyers, particularly in Japan and Singapore, represent another significant cohort, often motivated by these jurisdictions' progressive regulatory frameworks. An established cryptocurrency trading infrastructure. The retail investor profile has also evolved significantly from previous market cycles. Current retail XRP buyers tend to be more sophisticated, with many possessing previous cryptocurrency experience and demonstrating greater awareness of fundamental analysis factors. These buyers often utilize dollar-cost averaging strategies and demonstrate lower sensitivity to short-term volatility, suggesting a maturation of retail investment behavior that mirrors institutional approaches. Banking and financial services. Institutions represent a particularly intriguing buyer category, often acquiring XRP through indirect channels to test blockchain-based payment systems. While maintaining regulatory compliance, these institutions typically engage in small-scale purchases for pilot programs and technology evaluation, but their involvement signals potential for significantly larger future adoption. The motivation extends beyond speculation to operational considerations, as these institutions explore whether blockchain-based settlement systems could reduce costs and improve efficiency. Algorithmic trading firms and quantitative hedge funds have also increased their XRP exposure, attracted by the token's increasing correlation with traditional financial markets during certain periods and its occasional divergence during others. These buyers utilize sophisticated trading strategies that capitalize on arbitrage opportunities across exchanges and employ machine learning models to predict short-term price movements based on on-chain data, social sentiment, and macroeconomic indicators. The timing of current buying activity correlates strongly with several key developments. In the regulatory landscape, speculation is mounting that the SEC could announce the end of its case against Ripple this Saturday. If that happens, analysts believe it could signal a coordinated shift, including Fedwire adopting distributed ledger technology DLT alongside ISO to 002 standards. This regulatory catalyst has attracted buyers who view the potential resolution of the SEC case as a binary outcome that could dramatically increase XRP's utility and adoption rate. Behavioral analysis of current buyers reveals several distinct patterns that differentiate this cohort from previous market cycles. Current buyers demonstrate greater patience with accumulation strategies, often building positions over weeks or months rather than making large, immediate purchases. This behavior suggests institutional influence even among retail participants, possibly reflecting improved educational resources and investment advisory services that promote more disciplined approaches to cryptocurrency investing. On-chain data provides additional insight into buyer behavior patterns. Large wallet addresses have shown consistent accumulation patterns, with many addresses demonstrating buying behavior during price dips, rather than momentum-based purchasing. This contrarian behavior typically indicates sophisticated investors who conduct independent analysis rather than following market sentiment. The distribution of wallet sizes has also shifted, with a growing number of mid-sized wallets suggesting broader institutional participation, rather than concentration among a small number of large holders. The macroeconomic environment has created conditions that favor XRP buyers with specific risk profiles and investment objectives. Rising interest rates have made yield-bearing assets more attractive, but have also increased the opportunity cost of holding non-yielding assets like traditional cryptocurrencies. XRP buyers often view the token's utility in cross-border payments as providing an implicit yield through cost savings, making it more attractive than purely speculative digital assets in a higher interest rate environment. Inflation concerns in major economies have also influenced buyer motivation, with some institutional investors viewing XRP as a hedge against currency debasement while providing operational utility. This dual-purpose appeal attracts buyers who might otherwise avoid cryptocurrency investments, as the utility component provides fundamental value justification beyond speculative considerations. Current buyers also demonstrate sophisticated understanding of market microstructure, often timing purchases to coincide with options expiration dates, future settlement periods, and other technical factors that can influence short-term price movements. This behavior suggests institutional involvement or retail investors who have adopted institutional-level analytical capabilities. The ETF development timeline has created a specific buyer profile focused on anticipating increased structural demand. With regulatory reviews underway, a public comment phase active, and futures ETF approvals imminent, expectations are high that spot XRP ETFs could be approved by late 2025. These buyers understand that ETF approval could create forced buying from passive investment strategies and are positioning ahead of this potential demand shock. Regional banking partnerships and payment corridor development have attracted buyers who focus on fundamental adoption metrics rather than speculative trading. These buyers often conduct detailed analysis of Ripple's business development progress and view XRP purchases as investments in payment infrastructure modernization. Their buying decisions frequently correlate with announcements of new banking partnerships or pilot program expansions. Technology-focused buyers represent another distinct segment, often including blockchain developers, fintech entrepreneurs, and technology investors who understand the technical specifications and competitive advantages of XRP's consensus mechanism. These buyers typically conduct detailed technical due diligence and often maintain positions based on their assessment of XRP's technological superiority. In specific use cases, the derivatives market has also attracted sophisticated buyers who utilize option strategies and futures positioning to gain XRP exposure while managing risk. These participants often represent the most sophisticated end of the buyer spectrum and frequently influence spot market pricing through their hedging activities and arbitrage strategies. Current buying patterns suggest a market transition from speculative to fundamental-driven demand, with buyers increasingly focused on long-term adoption potential rather than short-term price movements. This shift reflects broader maturation in cryptocurrency markets and suggests that current XRP buyers may represent a more stable and committed holder base than previous market cycles. Risk management considerations have become increasingly sophisticated among current buyers, with many employing position sizing strategies that account for regulatory risks, technological risks, and market risks. This disciplined approach suggests institutional influence and indicates that current buyers may demonstrate greater resilience during market downturns. The international payments use case continues to attract buyers who view XRP as operational infrastructure rather than speculative investment. These buyers often include importers, exporters, remittance companies, and other businesses with significant cross-border payment flows who recognize potential operational benefits beyond investment returns. Market sentiment analysis reveals that current buyers demonstrate lower correlation with broader cryptocurrency market sentiment, suggesting independent analysis and conviction rather than momentum-based investing. This independence from broader market movements indicates a more mature and sophisticated buyer base that may provide greater price stability during market stress periods. The emergence of cryptocurrency-focused wealth management services has created a new distribution channel for XRP investment, allowing traditional investors to gain exposure through familiar investment structures. These services often attract buyers who might not otherwise directly purchase cryptocurrencies, but are interested in digital asset exposure within traditional portfolio management frameworks. Environmental, social, and governance considerations have also influenced some buyer decisions, with XRP's energy-efficient consensus mechanism attracting investors who avoid proof-of-work cryptocurrencies due to environmental concerns. This ESG-focused buying represents a growing segment of the institutional investment community. Looking forward, current buying patterns suggest several potential developments that could influence future demand. The pending ETF approvals could create structural demand that extends beyond current buyer profiles, potentially attracting passive investment strategies and retirement account allocations. Regulatory clarity could expand the institutional buyer base to include more traditional financial institutions and corporate treasuries. The evolution of central bank digital currencies and their potential integration with existing blockchain infrastructure could create new buyer categories focused on interoperability and technological compatibility. Cross-border payment adoption could attract operational buyers who view XRP as essential infrastructure rather than investment vehicle. Current XRP buyers represent a sophisticated and diverse coalition of institutional investors, corporate treasuries, technology-focused funds, and evolved retail participants who demonstrate fundamental analysis capabilities and long-term investment horizons. This buyer profile suggests a market transition toward utility-driven demand that could provide greater stability and sustainable growth compared to previous speculative cycles. The convergence of regulatory developments, technological adoption, and institutional acceptance has created conditions that attract buyers with diverse motivations. A common recognition of XRP's potential role in the evolving financial infrastructure Understanding these buyer profiles provides insight into potential market dynamics and suggests that current demand patterns may represent the early stages of broader institutional adoption rather than speculative trading activity.